deeper into that question on IT and what this season is telling us. Because yesterday, a lot of the mid-cap IT companies were, setting the screen on fire. Like I said, two to name immediately would be Coforge and Persistent. Great growth coming in. I mean, these are companies that are clocking 5, 6, 7% quarter-on-quarter growth in this kind of an environment. We have Sandip Agarwal, fund manager at Sowilo Investment Managers, joining in. Sandip, thanks so much for joining in. So the contrast is stark, right? The large guys are telling you that it's okay, just about the same, demand environment gradually will pick up. And there we're still dealing with very, pedestrian expectations in terms of growth. And yesterday we were talking to Coforge and they're talking about, doing, 25, 30, 35% this year. They're sounding aggressive, doing acquisitions. So, run us through what's going on here and which are these niche companies that investors perhaps should be looking to own?
Yeah, hi, good morning, and thanks for having me on the show. So I will agree with Dipen a lot on all the points you asked. So basically, 20 years back, as he rightly mentioned, it was large cap which always used to do well. But now some of the mid caps, which are actually mid cap relative to large cap market cap today. But if you go 20 years back, this size companies were called large cap in India. So now they have become a quasi large cap in parlance to that time, and today may be called mid cap. So they are doing phenomenally well, but I believe that, there is a bifurcation into the technology they are servicing. So I think in the ER&D space where, KPIT, Persistent, Tata Elxsi, all these names are there, there is a phenomenal growth because, the penetration in those industries is very low, 4-5% of outsourcing, and they are not at all penetrated. They are at the beginning of the, 2-decade cycle in my view. So that's the reason, these companies are able to deliver so well, and I think they will do well for next 10-15 years. And some of the investors take call, okay, we are willing to pay 3 times PEG ratio, which I am not willing to, but they are taking a 10-15 year call that they can multiply from here also 3, 4, 5 times, and which will eventually mean 15-17% CAGR on stock return, which is a very good return. On the other side, typical IT services companies, which even in the mid-cap space, they are not doing so well. And also, there are some IT services, the large cap IT services companies, they are into the matured business where, 20% penetration or more than that has happened. So their, growth has obviously slowed down, one, with respect to their scale, two, with the amount of money which can be put on those businesses anymore. So I think, from that perspective, these companies are trading at 1.25 times, 1.5 times PEG ratio. They are all good dividend distributing companies. So, this is the two ways the industry is today. So in my view, people are taking very long-term call on structural bets. For them, these expensive mid-cap companies are very good bets. For people who want, a stable 10-15% return with good dividend and buyback support, I think for them, the large names are very good.
Okay, so let's just dive a little deeper into the mid-cap universe. You said ER&D would be a place which investors would want to look at. And there you took two names, I think, Tata Elxsi and KPIT Tech. And Persistent, of course, Persistent has done really well as well. Now, on KPIT, and we'll be talking to the management today as well, the fact that some of these companies could have big exposure, say, to the auto sector, right? I mean, isn't that a near-term concern, looking at the way the demand trends are shaping up? And just tell us more. So there's ER&D, you named 3 companies here. I don't know what basket Coforge fits in, but and a lot of them are now executing or beginning to execute Gen AI related or AI related work as well. So what more should we be looking at? Where to keep that sharpened focus when we're looking at the mid-cap IT universe?
So, another very interesting thing here, I would say, is that all these mid-cap companies, which, which are Coforge and others, which are also doing phenomenally well. I think what is happening is, as rightly said by Dipen also, that, now for them, 20, 30, 50 million makes a big difference, and suddenly their growth rate goes up phenomenally well, and they are able to beat all other large names, because for large names you need 500 million or $1 billion deal to make that change in their size. So that is something which is also helping. And in case of Coforge particularly, they have exposure to some of the sectors which are on a very strong revival right now, and this company has delivered superb growth for last 4-5 years, if you see, since the change in management. On KPIT, particularly, if you see, the auto exposure is obviously a little concerning, but I would still say that because they are in ER&D, it is you should go by services rather than the industry. So services should be preferred over industry. I see this services of ER&D doing phenomenally well because the penetration and the amount of outsourcing which has happened is just the beginning. So I would say there will be quarterly hiccups, but for long-term investors, these are very good streams to be in.
All right. Sandip, just one quick question on KPIT because, we'll be speaking to them today, but they had their con call and now they're guiding at the lower end of the range, which could be a little bit concerning. And that stood out yesterday because they didn't participate in that mid-cap IT party. It's already corrected close to, I think, 15-18% from the recent peak. Would you look to buy the dip if you get one today?
So, we run a PMS, will be very hard to call out what we will buy or not. But
no, what would your call be? What would your advice be? In terms of if you get a dip, then it would be more than a 20% correction from the recent peak. Is the stock looking attractive then, giving the longer term runway that it has?
Yes, so, I think it will do, all these companies will do phenomenally well, including KPIT. Only thing is that, they have very big exposure to auto. And because of that, if there is a slowdown in Europe, it may impact that piece of the business to some extent. And because of that, you have seen this correction and we may see a little bit more correction. But also remember that this stock has moved up very, very sharply. One of the best performing stocks like Coforge in last 3-4 years. So, lot of returns were upfronted. It has become insanely expensive. And I think that returning to the normal is now happening. I would say that if someone is taking a longer term 2, 3, 5-year call, I don't think, these are bad stocks at all. These are good stocks to accumulate. And obviously, you can't call out what will be the bottom, but there could be some more correction. But as a company and as a services they are in, it is in a phenomenal space, I would say.
Absolutely. Sandip, we'll leave it there. Thank you very much for your time. Appreciate it here on CNBC-TV18. The Coforge management, the aggression yesterday.
Yeah.
I mean, it was something. And by the way, it's interesting, as someone was pointing out, it's like they don't have a promoter now. Right?
Yeah.
It's a widely held institutional kind of stock.
Yeah.
And it's just at an all-time high, by the way, right? So,
and I think in the last, if you look at the last few quarters, he's repeatedly been very confident.
Yeah.
You probe him more, he says, I'm even
I remember
more
first quarter,
Yeah.
he was absolutely, actually I told Sudhir yesterday, I said, you're listening to you, people are going to be calling up the brokers to buy
buy
the stock.
now.
I mean, stock ended about 11% higher in a tough market, so that's commendable. We'll take a quick commercial break here. We're going to come back in 11 minutes. No, we're going to come back in 2 minutes, but the